So let's talk about art. Is a painting that costs millions of dollars a smart investment? Or is it really just a beautiful, incredibly expensive thing to hang on your wall? For centuries, the answer was actually pretty clear. But today, technology is completely rewriting the rulebook. We're going to dive into how the whole world of high-end art is being shaken up and explore whether that masterpiece can finally start paying you back.
All right, here's the game plan for this explainer. We'll kick things off with why we're so drawn to physical stuff in the first place. Then we'll get into the skeptical view, the traditional investors who've always said art is a fool's game. We'll unpack the psychology behind all that, and then, this is the exciting part, we'll see how technology is throwing a massive wrench in the works, maybe even creating a brand new kind of asset. By the end, you'll have a totally new way to look at this market.
So, first up, what is it about physical things? Why do we love assets we can actually see and feel, especially when our world is becoming more and more digital? What's the magic there?
I mean, this quote just nails that feeling, doesn't it? There's this primal satisfaction in owning something solid, something you can physically touch. It could be a building, a bar of gold, or a painting. It just feels more real than numbers blinking on a screen. It's like an emotional anchor in a world of bits and bytes.
And right here, this is the core of the whole debate. This is where our gut feeling crashes head-on with the cold, hard rules of finance. Is just loving a masterpiece enough to make it a sound financial move, or is it something else entirely?
Okay, let's get into how traditional finance sees things, because they draw a very, very clear and honestly pretty brutal line in the sand. For a classic value investor, the answer to that last question is a hard no. They have a completely different way of defining what an asset even is. And here it is. It's an incredibly simple, powerful rule. It has nothing to do with beauty or rarity or how old something is. The only thing that matters is this. Does it generate income for you? Does it put cash in your pocket? If yes, it's an asset. End of story.
So by that same logic, anything that costs you money to hold, things like insurance, storage, maintenance, taxes, that's a liability. It's taking money out of your pocket. In fact, following this rule, even the house you live in is technically a liability. It's not paying you rent, you're constantly paying the mortgage, the taxes, the upkeep. It costs you money every single month.
So this is the big distinction you have to get. An investment works for you. Think of it like a rental property that brings in rent every month, or a stock that pays you a dividend. It's an economic engine. A speculation, on the other hand, it just sits there. Its entire value depends on you finding somebody else down the road who's willing to pay more for it than you did. You're not buying a business, you're buying an object and just hoping it gets more popular.
And this brings us right back to art. See, from this perspective, anything that doesn't produce something valuable for other people and therefore doesn't generate cash gets tossed right into the speculation bucket. So a Rembrandt painting and a rare Pokemon card, financially, they operate the exact same way. The only way you get a cash return is the moment you sell them.
Okay, so this leads us straight into the psychological engine that actually drives the prices for these kinds of things. It's a concept that's been around forever, fueling everything from the Dutch tulip mania way back when to modern-day bubbles. It's famously called the greater fool theory. This quote, this is the entire playbook for speculation, right here. It's not about intrinsic value, it's all about momentum. The best way to think about it is like a high-stakes game of hot potato. Your only job is to pass that potato to the next person for a higher price before the music stops. You're just betting that there's a greater fool out there than you. Just think about this for a second. A share of Apple stock represents a tiny piece of a real, productive business, a business with factories and employees, and, most importantly, profits. A Rembrandt painting? It doesn't have an earnings report. Its value is purely a social agreement. It's a collective story we all agree on that says it's worth millions.
This beauty contest analogy is just a perfect way to think about the art market. You don't get rich by buying the painting that you think is the most beautiful. No. You get rich by buying the painting that you think some billionaire 5 years from now will think is the most beautiful. Your personal taste is irrelevant. What matters is your ability to predict what the crowd will want.
So for decades, for centuries really, that was pretty much it. That was the story. Art was a speculative game for the super rich. But now technology is dropping a brand new radical element into the mix, one that might just change the fundamental nature of art as a financial object.
Check this out. Van Gogh's Sunflowers sold for $40 million, way back in 1987. That is just a staggering amount of money. It's a price tag that locked out basically everyone on the planet except for, a tiny handful of people. It was an all-or-nothing game. You couldn't just buy a little piece of a masterpiece.
And this question, well, it's not hypothetical anymore. This is the core promise behind a whole new wave of technology that is fundamentally changing what it even means to own something.
And here's where everything changes: tokenization. It takes a single, massive asset, like a painting or a classic car, and basically shatters it into thousands of tiny, digital, tradable shares. Each one of those tokens is like a digital deed, secured on a blockchain, that proves you own a verifiable slice of the real thing.
So, if you can change the whole structure of ownership, if you can make it divisible and easy to buy, can you actually change the financial DNA of the asset itself? Can technology really turn a pure speculation into something more?
But this is the key question, right? This is what it all comes down to. We've maybe solved the access problem, but what about the income problem? Can these new digital art shares do the one thing the physical painting never could? Can they actually start putting money in your pocket?
Okay, just look at this table. Tokenization directly attacks every single weakness of traditional art investing. That huge barrier to entry? Gone. Slashed from millions of dollars down to maybe just a few bucks. Liquidity? It could go from a slow, years-long process to trading in seconds on a digital market. But the really mind-blowing shift is that last row: income potential. For the very first time, a painting can do more than just sit there looking pretty.
And this is the revolutionary idea. All of a sudden, an asset that used to just cost you money, storage, insurance, could become a revenue generator. You have platforms now that can take a famous painting, lease it out to a museum or a gallery, and then that rental income gets paid out to all the people who own a token, like a dividend. This is what completely blurs that old, hard line between an investment and a speculation.
So, if tokenized art isn't a pure speculation anymore, but it's not quite a traditional investment either, what is it? It means we have to stop thinking in terms of just good or bad and start using a more sophisticated way of looking at risk and value in this brand new world.
Instead of a simple choice, it's way more helpful to think of it like a spectrum. On one end, you've got pure cash flow assets, like a rental property, where the value is all about the income it generates. On the other extreme end, you have pure speculations, like collectibles, where it's 100% about finding that greater fool. And these new tokenized assets? They're landing right in the middle. Their value is this new hybrid of potential cash flow and good old-fashioned market hype.
So at the end of the day, what is an asset really worth? Is it about the cold, hard cash it can generate? Or is it about the power of a great story that we all just agree to believe in? For centuries, art has been all story. Now technology is trying to bolt a cash flow engine onto it. And the result is this new, strange, hybrid asset that forces all of us to decide, are you going to bet on the numbers, the narrative, or this new, fascinating space that's opening up right in between?